Hello and welcome to another update video about ETH. As we are starting basically a new trading day, the daily candle is closed. ETH is recovering a little bit. Bitcoin is approaching the 40K. ETH is moving towards that resistance area I defined earlier today and specified. So we want to take a look at the different levels that are now relevant. The overall scenario hasn't changed at all. In fact, the price has reacted to this trend line I shared with you. Here, the ascending trend line. Eventually, this could form potentially a head and shoulders pattern. We'll see. But let's just focus on the levels. Let's just focus on the levels. I did share that earlier today on Twitter, on the X network as well. As always, feel free to check out our Twitter channel. There are daily updates as well, additional updates, not only about ETH, Bitcoin, others as well. We publish many more in our gold membership, but there is additional content on Twitter as well. For example, earlier today, or it was actually yesterday, when the price approached this trend line already, I highlighted that what the real levels are, right? So that we have here the 23.6 FIB level as first line of resistance, and the 50% FIB level needs to break to have an indication that, let's say, a more substantial low is in place. They are the parameters. And then we've now moved towards that resistance area. So we'll see if there is a reaction here in the resistance area. At the moment, I'm still watching for another low. Please, again, I like to point that out as a warning these days, because there are more and more impersonators around. We use someone who's banning them. However, still they reappear and they will message you directly. We would never message you on social media directly. Please know that. And also, if you are following us on social media like Twitter, X network, or Instagram, for example, or LinkedIn or TikTok, make sure that you only use the links in the video description. Very, very important. Cannot stress that enough. There are people who are getting scammed. Sometimes I hear about it. We can only warn. Okay. That's the reason. I know people don't read that, these days anymore. I need to be careful what I say, but a lot of people don't read anymore. We've got a big, huge warning slide in the beginning of each video highlighting that we would never ask you for additional funds, never ask you for additional money, never. Okay, and we would not contact you directly, and we have no public Telegram group, okay, or WhatsApp group or whatever. Ridiculous. So I know it's annoying when I always mention that, but I want to do that more and more. Because, apparently it's not enough if we have that huge warning slide. I just want to avoid that people get scammed. Okay, let's talk about the structure here. The idea is here, B-wave top on Friday, the 12th of January. The market has started a decline. We only have 3 waves down so far. And at the moment, the expectation because of that would be that we see at least one more low in this wave 2 correction. So wave C of 2. Because the C wave is a 5-wave move, right? And we would like to see 5 down. If we only see 3 waves down, then it's possible that it bottoms here, sure. But then we need to see minimally a break above resistance to believe it. And it takes additional evidence. It requires additional evidence because we only have 3 waves down. So it would be possible in a so-called WXY structure. But a WXY with an overshooting X wave is a rare pattern. So I would need to see additional evidence. I wouldn't just believe it. It would not be my primary expectation. From here, likelihood suggests that we should see one more low or maybe even 2. But for now, I go with 1. But for let's say, for the possibility that we could already have a more substantial low in place, that's why I give you resistance. Okay, so we always need to know when the market changes. And that's not only here Fibonacci resistance, it is as well 2,382, but it's also previous swing highs, swing high, swing high. So it's structural resistance as well as Fibonacci resistance. Now, it's not that if the price goes to 2,385 that we can say it's bottomed. It needs to be a sustained break. What a sustained break is, it's a bit subjective. It depends on how the market breaks it and in what structure. So it's a bit, it's more, that terminology accounts for the unpredictability of markets, and the uncertainty in markets. So let's take a look at structure here in the white count. The idea would be, yep, we've had a wave 1, we've had a wave 2. The wave 3 already bottomed. We've got 5 waves down here. Then this would be wave 4 and one more low to come. The wave 3 reached minimum targets, minimum expectation. Absolutely. So I'm very open to the idea this could now be the wave 4. It is possible in the yellow count that we count a little bit differently. 1, 2 is the same, but we're basically still in the third wave and should then still see a fourth and fifth later. And within the third, we need 5. 1, 2, 3. So we see a small 4 now and a smaller fifth. But I have left on the chart the resistance area for the white count because it's a little higher. We give it a little bit more space. That basically is then relevant for the yellow and white wave counts, which means that if it really breaks, it is, let's say, the first reliable indication that a somewhat lasting low, or let's call it a more substantial low, has formed. If that's then already the rally in a third wave to 3,000 plus or not, that's a different question. That's what we have to deal with then. It can always extend further, this correction, in some kind of a weird way. But for now, we are just watching resistance, and downside pressure should remain as long as the price stays below resistance. Let's see what happens over the coming sessions. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.